Thank you for dialing in today. My name is Sinisa Othman. I'm a Vice Chair of the Malaysian Chamber of Commerce, Hong Kong and Macau. I wish to wish those who are celebrating Eid Mubarak, Selamat Hari Raya Idul Fitri. Our topic today is, have a dispute but don't want to spend money on it? Before I introduce our speakers, I would like to welcome our Chair, Datuk K. C. Gan, to give a welcome remark.
Thank you, Sanisa. Hello, everybody. Good morning to Marjolin in Amsterdam, and good afternoon to all our friends here, mostly dialing in from Hong Kong and Asia. I am representing MeiCham as a chairman to welcome all of you to this webinar. And actually, I was thinking the heading should have been heads you win, tails you do not lose. I think that should be the topic of this discussion here. Anyway, let me talk a little bit about MeiCham. We are only 6 years old, but on the average, we have at least about 3 activities a month. And even during COVID-19, since February this year, we have been quite active, not in the forefront, but behind the scene, raising money for the underprivileged and the medical staff in Hong Kong and Malaysia by giving them protective equipments and also face masks and sanitizers. So today is actually a day after yesterday where we had another similar event. And I hope some of you are also here today. Now, for MeiCham, we have about 400 members. And all of the members are very active in Hong Kong and the region. Most of them are professionals, and we hope those who are tuning in, who are not members, please join. It is a really great organization, this Malaysia Chamber of Commerce. Okay, I won't go any more further because this is a real interesting subject, and I will pass back to Sanisa to put the whole thing going through today. Thank you.
Thank you, Datuk K. C. Gan. This webinar is timely. As many of us are experiencing, COVID-19 has disrupted many businesses. And in this economic downturns, we will see a spike in commercial disputes. The difficulty for most companies is that they need to conserve as much cash flow as possible in business to weather the storm. So if your company has a dispute, but does not want to spend money on it, then dispute funding can help you. I'm honored to present to you experts from Omni Bridgeway, one of the world's largest dispute funding company. We have Tom zooming in from Singapore, and as you heard, Marjolin zooming in from Amsterdam, and here in Hong Kong, together with me, we have Cheng Yi. Let me introduce our speakers. Tom Glasgow is the Chief Investment Officer for Asia. He leads the Asian investment activities and business expansion for Omni Bridgeway. He is one of the leading thought leaders in dispute resolution finance. Prior to Omni Bridgeway, he was a senior member of Allen & Overy in Hong Kong. Next, we have Cheng Yi, who heads up the Hong Kong office. She is responsible for due diligence and management of funded matters across Asia and EMEA. Prior to Omni Bridgeway, she worked in the International Chamber of Commerce, International Court of Arbitration in both Paris and Hong Kong, as well as Shuk Lin Bo in Kuala Lumpur. Our third speaker is Marjolin van der Bosch, who is the head of Enforcement Asia. She's responsible for the strategic assessment and management of cross-border litigation, arbitration, and enforcement activities with a particular focus on Southeast Asia. She moved to Manila, Philippines in 2000 to work with Aboitiz Equity Ventures Incorporated, and since 2017, she relocated to Singapore. In full disclosure, I'm an investor in OmniBridge. Its stock price has gone through the roof since the COVID lows. The format of today's talk is our presenters would take turns to talk about what their company does and their business models. It will be followed by Q&A, As you are listening, feel free to type in your questions into the Q&A chat, the Q&A box in Zoom, so that I can collect and read them out during Q&A. Without further ado, please help me in welcoming Cheng-Yi.
Thank you very much, Sunisa, for the kind introductions. We really appreciate all your efforts to make this webinar possible. And our sincere thanks also to Mei Chan and to our chairman, Datuk K.C. Gan, for hosting the webinar. I've been a member of Mei Chan for around 2.5 years now, and I've really enjoyed meeting more Malaysians in Hong Kong and joining many interesting events, especially the ones involving Malaysian food. Having worked at the International Chamber of Commerce for many years, I find Mei Chan a very dynamic chamber, full of distinguished, warm and friendly individuals who excel at what they do. I'm so glad I joined. Today, we are delighted to have the opportunity to talk about dispute resolution finance. It is probably a new topic to most of you, and we hope you will find it useful. In light of everyone's focus on cash conservation and liquidity these days, we hope that our talk will encourage you to think about disputes, judgments, or arbitration awards that you may have pushed to one side or put in your bottom drawer because you would rather spend money on your core revenue-generating business, or maybe these cases seem too difficult or too uncertain to be worth pursuing and they have been written off. Let us have a look at them to see whether they can be worked up and monetized. You will see from our presentation that you have nothing to lose, as there is no financial downside. Now, there is quite a lot of detail in our slides, and don't worry, we will send them to you afterwards so that you can read them at your leisure. Our aim today is to get the key points across to you. If you have any questions, please do not hesitate to ask them using the chat function, or you can email or call us later on. We would be more than happy to speak with you. So each of us will speak for 15 minutes. I'm going to go first and give you an introduction to what dispute resolution finance is and how it has evolved. Tom will then go next and explain the benefits of funding for corporations and why we are seeing an increasing uptake from well-financed corporates. He will also provide a case study from Asia based on a real funded matter. And last but not least, Mariline will give you an idea of what our in-house enforcement and recovery team do and how they turn a judgment or an arbitration award, which is only a piece of paper after all, into cash. Next slide, please, Tom. Let's start with the evolution of dispute finance, and next slide again, Tom. What dispute resolution finance is. I'll give you a very simple description. To start off with, there are different terms for this industry. It is also known as dispute resolution funding, litigation funding, or third-party funding, and we will use these terms interchangeably during our presentation. They all mean the same thing. Basically, third-party funding occurs when, instead of paying for your lawsuit, litigation, or arbitration, which is what traditionally happens, someone else, a third party who has no involvement in the lawsuit, pays on your behalf in return for a share of the proceeds if and when any proceeds are recovered from your counterparty. If you lose the case, the funder receives nothing, not even reimbursement of the sums it expended during the litigation. Now, the key things to remember about dispute resolution finance are, firstly, you need to have a good claim that has a strong chance of winning. Secondly, your counterparty must be financially solvent and have sufficient assets that can eventually be converted to cash to pay you in the event that you win your case and your opponent fails to pay voluntarily. Now, the funder, thirdly, the funder who agrees to finance all or part of the costs of your lawsuit must have sufficient resources to pay all costs that arise during the legal proceedings. We all know that lawsuits can take a number of years to resolve, and there can be twists and turns down the road that may not be foreseeable. The fundamental obligation of every funder is to pay the agreed costs of the litigation or arbitration. And it would be a disaster if the funder goes bankrupt during your lawsuit and leaves you without funds to proceed. Fourthly, the funding agreement should clearly set out the funders and the funded parties' respective rights and obligations, and it should be reviewed by your lawyer. Fifthly, and lastly, the commercial terms are an important part of the funding agreement. They will provide that if you lose your case, your funder gets nothing and loses its investment. You are not required to reimburse the funder. But if you win your case, the funder gets reimbursed all the costs it spent on the case. These would include legal fees and disbursements, court fees, expert fees, arbitrator fees, hearing costs, and so on. And in addition, the funder gets a return on its investment that reflects the risk it takes in funding the case. And my colleague Tom will develop this later on. Next, it might be useful to understand how litigation funding came about. How was it conceived? As we are amongst the pioneers of modern day dispute resolution funding, we can shed some light on this. Next slide, please, Tom. This slide is intended to capture the past, the present, and the future of modern day funding. And it also captures the legal or regulatory status of funding in certain countries around the world. Let's start with the past. The practice of funding isn't new. In the UK and Commonwealth countries, for centuries, litigation funding was a crime. There was a major concern that the funder may be tempted for his own personal gain to inflame the amount of the lawsuit, suppress evidence, or even bribe witnesses or judges in order to improve the chances of the funded party winning the lawsuit. The legal term for this in the UK and Commonwealth is maintenance and champati. And this crime was only abolished in 1967 in the UK. However, maintenance and champati remain unlawful elsewhere, including Australia, Hong Kong, Malaysia, Singapore, and North America. In the late 1980s, one of our Australian founders, who is still with the company today, established a litigation funding business focusing on insolvency-related claims. Funding insolvency claims is an exception to maintenance and champati. The business was successful, and in 2001, IMF, which stood for Insolvency Management Fund, listed on the Australian Stock Exchange. The business expanded, and IMF, which subsequently became known as IMF Bentham, started funding classes of impecunious parties who had good claims against large corporations, financial institutions, and local governments, but they could not afford the legal costs. IMF provided the claimants in class actions with access to justice, which is another exception to maintenance and champati. And thanks to a 2006 landmark court judgment in Australia, maintenance and champati were abolished, and litigation funding has since thrived in Australia and also became commonplace in the UK, the US, Europe, Canada, the Middle East, and most recently, parts of Asia. As for the present day, I should point out that in Hong Kong, maintenance and champati remain very much alive and were carved out only for arbitration and related proceedings. And the exception for insolvency-related cases still applies in Hong Kong. We have funded a few of those successfully in recent years. Singapore went further and abolished maintenance and champati altogether, while retaining the power for courts to strike down a funding agreement if it is considered contrary to public policy. We are funding cases based in Hong Kong and Singapore and elsewhere in Asia and around the world. And I'll show you a map later on that captures our global experience. Now, most funders focus primarily on funding claims with strong merits in litigation and arbitration at any stage before a judgment is issued by a court or an arbitration award is issued by a private arbitral tribunal. And this is commonly called merits funding. In addition to covering the legal and other costs of the lawsuit, we also provide seed funding, where a potential client appears to have a good claim, but needs funds to engage an expert to work up the claims, such as a quantum expert to assess the likely range of damages suffered. We can also provide working capital if the funded party's main assets relate to the claim and it does not have sufficient capital to keep its business going during the legal proceedings. In the US, we specialize in funding law firms to pursue claims on behalf of their clients. And we are also asked to purchase judgments and arbitration awards from winning parties who have no appetite left to keep chasing their opponents to pay debts. So what does the future hold? Given that we are receiving more and more interest from well-financed corporations who see dispute resolution finance as a means to pursue good claims with little to no financial risk, possibly against defendants who come from countries with less well-established legal systems, or they're just very good at hiding their assets. This allows corporates to focus their financial resources and their employees' time on core revenue-generating business, rather than on fighting expensive and lengthy lawsuits. Next slide, please, Tom. Almost in parallel with IMF, in 1986, two Dutchmen established a business in Amsterdam called Omni Finance. And within a few years, the business shifted its focus to litigation funding and recovery of distressed assets. And gradually, Omni developed its expertise in funding successful claimants to enforce judgments or arbitration awards and to persuade or pressure losing parties to pay the owed sums. As you will have seen from the previous slide, there is no legal impediment to funding litigation or arbitration in civil law countries, which are basically non-Commonwealth countries. The business grew and expanded internationally to other parts of Europe, Singapore, and Dubai, specializing in enforcement of judgments and arbitration awards and recovery of the sums owed. And in 2016, the business became Omni Bridgeway Capital. IMF and Omni formally merged in November 2019, and earlier this year, we adopted the global name Omni Bridgeway. Now, there is a story to using this name rather than the combination of both names or an entirely new name, which I'll have to tell you another day due to lack of time. Next slide, please, Tom. As you will appreciate, we're still working out the finer details following our merger. We're currently working on integrating our business platform. So some of the statistics on the right-hand side of this slide represent our amalgamated group, and some statistics represent only one of our legacy businesses. And we will, of course, provide updated information in due course. Our success rate means that in all of the cases we agreed to fund, the vast majority were successful. And now I'm referring to the 84% figure that you see there. We measure success in terms of obtaining recovered sums for our clients. And the majority of those successes were settlements that both sides could accept. And for the remaining 16%, some were cases that our funded parties won outright and could recover, and the rest were cases that they lost, and we lost our investment. And this shows the inherently risky nature of litigation. The figures relating to our funds under management and recoveries for funded parties reflect IMF Bentham legacy business. And we typically return 63% of our recovered sums to funded parties, which we understand is one of the highest rates of return in the industry. The figures relating to our investments are more reflective of our combined business, which are perfectly complementary. IMF was one of the leading merits funders worldwide, and Omni was one of the most experienced global enforcement and recovery funders. And we are now the largest funding team worldwide. Next slide, please, Tom. And this is my final slide today. The map is a simple but visually effective way to show you that our merged company has funded or assessed cases in almost every country around the world. We have included countries in light blue where we have only assessed cases but not funded them, because each time we review a case, we develop expertise and contacts, which we can then bring to the next case and so on. And now I'll pass to my colleague, Tom, who will deal with corporate financing. Thank you.
Well, thank you, Cheng Yi, for that excellent overview and of the growth of our industry and how our business has got to where it's got to so far. And hello, everybody. It's a real pleasure to be here. Malaysia holds a special place in my heart, not just because of its excellent food, but because I was actually married in Penang, and my wife and I have many fond memories of our time in Malaysia, and we love getting there as often as we can, and hopefully we can soon. As Cheng Yi mentioned, one of the real trends in our industry has been a shift from funding of impecunious parties who cannot afford to bring their own litigation and arbitration to the use of our financing really as a sophisticated corporate financing and risk management tool. And it's not always clear why that might be the case, and so that's what I'm going to focus on for the next 10 to 15 minutes or so. So there really are many reasons why we're working with corporations, and I'm going to try and highlight the concepts to start with, but then dig into some concrete examples, which I'm hoping will resonate with some of you. But to start with, there is the cash flow driver, which is perhaps one of the more obvious. Litigation and arbitration is increasingly expensive, especially international cases, which can be complex and require multiple lawyers and experts and arbitrators and so on. And that can create a significant cash flow drag for businesses. And so a driver to us is to relieve that drag on cash flow. And often this is an opportunity cost consideration. So businesses, rather than spending $5 to $10 million on litigation over the next 2 to 3 years, generally prefer to spend that in their core business and generate a profit in the way that they are most capable of doing so. And so that's typically a driver. The often common driver also is risk mitigation. And as I think everybody knows who's been involved in any litigation, there is no risk-free case. There is always risk associated with litigation and a potential rogue judge or tribunal, even if you do have what appears to be a strong case. And many corporates are coming to us, especially large corporates who tend to be quite risk averse, to cover that downside risk. And as Cheng Yi mentioned, we cover the costs of ongoing cases, but we can also cover the downside costs. And in some jurisdictions, you're required to pay the other side's costs if you lose, and we cover that. We also help to reduce risk by ensuring that companies can involve their first counsel of choice and leading experts, and thereby improve the prospects of a successful recovery. And associated with that is the expertise that we can bring around ensuring recovery and enforcement, and Marilyn will come on to talk about that in due course. The third sort of bucket of benefits falls into the idea of unlocking value. Litigation is typically a contingent asset that really sits off the balance sheet. Most cases cannot be recognised as an asset on balance sheet. And litigation finance is unique in that it enables businesses the ability to leverage the value in that contingent asset to bring cash and funding onto the balance sheet. And because our funding is limited recourse, we are only entitled to a return on our investment from the proceeds of a successful recovery. Generally, there is no corresponding liability on the balance sheet. So for businesses that are leveraging their contingent assets to bring cash on, they can treat that as profit or cash on the balance sheet with no corresponding liability. So it is a sophisticated product that can be used in a beneficial way by financial controllers, and we're increasingly seeing it used in that way. Fourthly, are more soft elements, and this relates to the non-financial side, the non-financial benefits of what we do. Resourcing is a key factor, especially for smaller businesses that don't have their own internal legal teams or disputes specialists. They like to have a partner aligned with their interests who do have that expertise. And really our sole purpose, our sole business is the pursuit of litigation. And so we're more than happy to drive things forward on a day-to-day basis, freeing up the resources for businesses to deploy in their core business areas. The other softer element is around messaging. So if you disclose the involvement of a funder like Omni Bridgeway that has a 80 to 90% success rate, it sends a very strong message to the other side. You've had a professional, otherwise independent party vet your case very thoroughly and provide a fighting fund to support it. And that tends to prompt settlement. It does send a very strong message. And not only to the other side, but it also sends a message to a tribunal, to the court, and importantly for some of our clients, it provides reassurance to their stakeholders and investors that this is a good claim, that the risks are well managed, and it's worth pursuing. So those are some of the general concepts. Perhaps just to unpack a few examples from our recent experience in Asia. And hopefully some of this might resonate with people listening in today. We do work with large organizations, with MNCs and conglomerates, and really the driver there is around budget constraints. A lot of these larger businesses are broken up into smaller business units, and the budget is not always available when a large claim arises. And so there are constraints internally in being able to pursue claims. And because of that, we see that sometimes claims are not pursued or they're settled on unfavourable terms. But another key driver is the risk aspect. And as I mentioned earlier, a lot of the larger organisations we work with are particularly risk averse. And I think that's because a lot of them are quite hierarchical. People don't want to necessarily stick their neck out to suggest that the business should incur significant cost in pursuing a claim in case they are unsuccessful. And so this is a way in which they can mitigate against that personal risk in a way. Smaller, medium-sized businesses, in particular at the moment, are feeling cash flow constraints. We're seeing a lot of ongoing disputes that are now coming to us as businesses are feeling the pinch of paying their lawyers and experts and so on. And they're also interested often in the working capital advance that we can provide. And in that sense, where there is enough claim value involved in the project, we can sometimes not only pay the costs of pursuing the case, but make an advance for use elsewhere in the business. And we're doing that increasingly at the moment and over the last 18 months or so with smaller businesses, allowing them to pursue other projects that they otherwise might not. And resourcing as well, as I mentioned, for those smaller businesses that don't have internal legal teams. And I do have a good example which covers a number of these elements in a specific case, which I'll come to in due course. Construction and infrastructure firms, really the driver there is often an opportunity cost question. They don't want to divert capital away from other projects. They may also have existing claims and awards. And we're now seeing businesses looking at, what do they have in the bottom drawer that they might not be pursuing, looking really for any existing awards or straightforward claims that they might now be able to monetize and aid or bringing some value onto the books. We also work with financial services businesses, and that includes insurers and banks. And for insurers, we're often looking at helping with subrogated claims and banks in the pursuit of non-performing debt. And Marilyn will talk in due course about our joint venture with the World Bank IFC, which I think is very interesting in this respect. Listed entities, state-owned entities reporting up the chain, often interested in the balance sheet benefits that I mentioned earlier. and also providing that confidence to investors and stakeholders in pursuing cases and managing risk. There are also personal considerations that sometimes drive requests for funding from in-house lawyers or financial controllers if they are incentivized to reduce external spend. One of the quickest ways to do that is by engaging with third-party funding like us. Chengi also mentioned that we support law firms. We do see them as businesses as well. In jurisdictions where law firms can act on contingency fee basis or deferred fee basis, we essentially help them cover their overheads in the meantime and then share in the upside of the cases that they succeed in. So there are some examples, and hopefully some of that resonates with a few of you. In terms of what we fund, we really do fund a broad range of disputes. Our focus in Asia is very much on international arbitration, where there tends to be the largest number of high-value complex disputes. And there are a number of different ways in which we can package things up. The simplest form is funding of a single claim. And one of the key variables in taking on a single claim for us is the economics associated with it. And we're often looking for proportionality between the costs of pursuing the claim and the likely recoveries. And we tend to look for a ratio of about 10 to 1, 10 being the likely claim size and recoveries, and 1 being the costs of getting there, in order to make sure that it works economically from a funding perspective and to ensure that at the end of the day, the funded client receives the bulk of the recoveries. There are different ways in which we can fund single claims. Sometimes we're asked to fund all of the costs involved, and that might be the lawyers, experts, arbitrators, other disbursements associated with it. But increasingly, we're only being asked to cover a portion of the case. And that might be on a cost-sharing basis. We might fund 50% of the costs with our client picking up the other half, or indeed sometimes just a particular item. In international arbitration, the advance on costs payable at the outset of the case can be a large amount up front, and sometimes we're being asked to meet that. Increasingly, we are looking at packages of different sorts of cases for clients and putting them together in a portfolio. The benefit of that from our funded clients' perspective is it allows them to fund a broader range of disputes. So whereas we look for a 10 to 1 ratio in a single claim, we can look at that across an entire portfolio. So long as there is enough claim value within the portfolio, we can fund other sorts of matters. So they might be claims which don't necessarily look for a large commercial return, but rather for the specific performance of a contract, or to be used as leverage to obtain a new deal, or indeed defence costs. So businesses may be having to respond to claims. They can have those costs funded and offset against other claims that they might be pursuing. So it gives greater flexibility. From our perspective as investors, it can mean that we're diversifying our risk, which means we might be able to provide more attractive pricing for our funding. Chengi mentioned seed financing and working capital, as I mentioned earlier. We can provide that as an additional way of leveraging value in contingent claims where there is sufficient value there to do so. Now, it isn't a pro bono exercise. We do look for a return on our investment, and I'm sure you're wondering what that looks like. The key takeaway is that it's very flexible. It really depends on the case at hand and the needs of the funded party. And really it all comes down to risk allocation. How much risk are you asking us to take on your behalf? As I mentioned earlier, it's non-recourse, so it's a binary outcome. If the case is unsuccessful or we don't recover, then we don't expect anything in return for our investment. If we do have a successful result, then typically we'll be looking to have our costs reimbursed and then a return on our investment, which we structure as either a percentage of the resolution sum, the amounts recovered, or sometimes a multiple of our invested capital. And sometimes it's a combination of both. And as I say, it really depends on the risk involved. Like any other asset class, the higher the risk of your investment, the higher the return you expect. Similarly, the longer that you're invested, the higher the return that you expect. And that is the way that our returns are structured. As I mentioned, there are ways to reduce our expectations around returns if we can reduce the risk that we're taking on by diversifying that risk across a portfolio, or if we can share that risk with the funded client on a cost-sharing basis, or indeed in some jurisdictions where the law firms can share in the risk, we will do that as well. So to give you one example of the flexibility in our financing packages, on the screen here is an example from one of our media clients in Asia. They had 2 international arbitrations, one larger claim, one smaller claim. The smaller claim we wouldn't have been able to fund on a standalone basis because the economics didn't work, as I was explaining earlier. There was also potentially more difficulty around recovery with the smaller claim. We therefore put it together in one package as a portfolio, and that allowed the client to pursue both cases with funding. It also allowed us to diversify our risk in relation to the claim with more difficult recovery prospects. As well as providing funding for the case, or the cases, we've provided a substantial working capital advance in this example, and that client is working towards an IPO in the near term. And that additional funding is providing support for the work that they're doing as they lead up to their IPO, and in a way that doesn't have a negative balance sheet impact. So there is no liability on the balance sheet. We're also actively helping to manage those 2 arbitrations, so the drag on the resources for the business is freed up, and they can really focus on what they need to do with this IPO. So I think that's a good example of the many different benefits. I should add that the one additional point there is that our support of those claims, the business believes, gives confidence to current investors and future investors in the strength of the claims, and that they've been able to mitigate the risks involved. So I think that's a good example that helps to demonstrate a number of the concepts I've highlighted. I'll stop there and welcome any questions in due course, but I'll pass over to Marilene now, and thank you for your time.
Thank you, Tom, and thank you, everyone. It's very, very nice to be able to attend this webinar. I am sorry that we cannot meet in person, but I hope that traveling will ease up soon again, and that we can actually meet with you in person. I'm based in Singapore, and I find myself in Malaysia a lot, and it's always a great pleasure to be there. So I'm looking forward to doing that anytime soon. Anyway, Tom, can you please go to the next slide? I'm going to tell a little bit more about enforcement and recovery financing. So imagine this, you are unfortunately locked in litigation or arbitration and you win the case. That's a good sign and you're really happy with that. You spend a lot of time and a lot of money, but after a couple of years you prevail, you have that award, and then you find out that your client, the counterparty, is actually not paying up. Because as Cheng-Yi said before, an award or a judgment is not more than a piece of paper. So what do you do now? And that is something that we also offer, we have experience with and offer assistance with, and I'm going to tell a little bit more about that the next 15 minutes. So the enforcement services. So what do our clients need? They need funding and management of the enforcement actions. We assist with that. And we can do that at any stage in a litigation or arbitration. So it can be if you already obtained the title and have that piece of paper, but it can also be if you still have to obtain it, and then we can already assist and looking at the end result, getting money in the bank. Again, also just enforcement services when you already have obtained the award works exactly the same as the litigation funding and arbitration funding model that Tom and Cheng-Yi just discussed. So it will be no recovery, no fee based, and we will cover all costs and share the financial recovery. The other possibilities that we purchase claims, we also have clients who want to sell their claims, and we are open to that as well. As already discussed also by Tom and Cheng-Yi, there can be one claim, but it can also be a bundle of a package of claim that we fund as a portfolio. The third service that we offer is the DARP service. We entered into a joint venture with the International Finance Corporation, as you know, the private equity branch of World Bank. And we assist World Bank and IFC there for the distressed asset recovery program that they have for MENA banks. So that means that we have been tested extensively. We were subject to a due diligence for quite some time, and we were tested on our success rates, and in the end it ended up with a joint venture. So what we do is we look and assist banks in MENA areas who have non-performing loans in their portfolio, and we look at all those outstanding loans, and then we buy them up, and then we actually take them over and enforce against the debtors, so that the banks will have their loans out of from the books, and the overall debt ratio of the country will also go up. So in the end, World Bank can actually extend additional and new loans to these countries who are in need of the development. Next slide, please, Tom. So it says there, the world's most experienced enforcement team, and it sounds like bragging, and it's a little bit bragging as well, but it is actually the fact. We have the largest in-house team, and we have the longest experience. We have been doing this since the 1986. So what do? We enforce in over 100 jurisdictions across APAC, the Americas, Europe, and MENA. And we have been solving 100 plus claims against sovereign and quasi-sovereign debtors across APAC, the Americas, Europe, and MENA. We have many cases where we successfully settled with sovereigns, and we also have a lot of experience handling cases against government-owned entities. The enforcement teams consist of over 50 specialists, and among us, we speak over 25 languages. For example, Mandarin, Urdu, Turkish, Russian, Lithuanian, and so on. And that proves to be very, very relevant because I'm going to discuss that a little bit later. We usually have a global on enforcement, and it's very convenient that we actually speak the local language. We have civil and common law litigators and enforcement lawyers, but also economists. And last but not least, we have our own in-house assets tracing team and intelligence professionals who assist throughout the case and not as a separate services. Sometimes we get questions because we have this in-house asset tracing team. Do you offer that also? But it's always together with an enforcement effort that we assist. So that in-house asset tracing team assists the enforcement team with the enforcement, and I'm going to talk about that a little bit more as well. Next slide, please. Let me start with a very brief case study. We handled a case for a UK client, and it was a case against a Nigerian counterparty. And after 4 years of arbitration and $4 million spent on that arbitration, they prevailed, and they were very happy, and they obtained the award of $12 million. So they had that piece of paper, and they served that piece of paper, or they tried to serve it on the counterparty. They wrote letters and emails and asked them, so can you now please pay up? and nothing happened. So the client came to us, contacted us, and requested our assistance with the enforcement. So first thing we did, we wanted to check and try to serve the documents again, and we asked our local contact in Nigeria to go to the headquarters and the premises in Lagos. And if you can show the next slide, Tom, please, this is what he found. We got a picture of an empty plot. So not even the building being built in the back, but the empty plot in the front, that was headquarters of the counterparties. So unfortunately, we had to tell our client that this was not going to fly. And I mean, if there is definitely not anything to find, then we cannot assist with the enforcement. But it's also pointing out that this is something that probably could have been avoided, or at least should have been checked at some point during the arbitration. And this is something that we are very happy to assist with. Next slide, please, Tom. So how do we deliver results for our clients? Well, you're in the business of banking or logistics or import-export, but the last thing you want to do is probably pursuing awards. And that is something that we can do for our clients. So our focus is always on getting the highest possible amount in the shortest possible time. And to do that, that is, first of all, we always have a multifaceted strategy to create leverage. So, as I said, we look at asset enforcement, but we also are looking at non-asset leverage. So, for example, trade relations or financial ratings that can be affected by an award or a judgment that's not being paid. There's also diplomatic ways. And of course, also other legal ways than enforcement. For example, join another arbitration or assist another party that is acting against the same counterparty to actually go together and see what you can do. We work across jurisdiction, I said it before. So we look at all jurisdictions where we can do something with the judgment or award, and taking into account, for example, time limitation considerations, because awards and judgments get time barred at some point. So if you wait too long, you may not be able to enforce it in certain jurisdictions. So for example, if you want to go to China, it's only 3 years, but if you want to go to enforce in the Netherlands, it's 20, and it can be anything in between. So it's always good to know that it's always good to come sooner rather than later, but that is something that in our own strategy, we also have to take into account. So what we do also is we sequence the jurisdictions based on the arbitration friendliness for recognition. And we also have to time the asset seizures or attachment of seizures between the jurisdictions very well. As I said, we have over 30 years of experience doing this. We have our own databases, but we also are very well aware of the local politics, and we keep track of everything that's published on certain counterparties. Because of all our cultural backgrounds, we also are very well aware of the regional customs and cultures. And we have an extensive network and connections to assist us with the enforcement, both lawyers and people on the ground who just, for example, external asset tracing efforts, if we need that. Next slide, please, Tom. So, as I said several times already, assets are key when you want to enforce. I mean, all the other possibilities to enforce are interesting, but we always focus on the assets and what we can find. So what are we looking for then? We look for bank accounts, but also trade flows and money flows. For example, counterparties that export regularly to other jurisdictions. Well, we try tracking them down. We try to find a pattern there, and if we have that pattern there, we go either after the shipments or the letter of credits of outstanding payments in the countries where the exports are going to. Hard assets, so the planes, the trains, the automobiles, but also assets held by third parties. And what we always prefer are assets that have a high attention value, which is not the same as a high value. And maybe an example to in this would be, we had a case a couple of years ago against a sovereign state, and that state owned an apartment in New York City. We found that and we attached it, and they didn't pay up, so we tried to foreclose. But it turned out that that was actually used by the mistress of one of the decision makers in the government. And even though that apartment was worth only a small part of the actual awarded amount, that the fact that we found that and really inconvenienced some of the decision makers there, we managed to have the case settled quite quickly. So also with attention value, I do not mean publicity, because that usually works counterproductive. If a story or the fact that we attach something actually gets in the newspaper, really people can get upset, and it sometimes really makes counterparties make statements in the press that actually make it very, very difficult to settle later on. I have people saying in the state, we're never going to pay, this is pressure that they are pressuring us and it's unfair. Then later in stage it will be very difficult for them to row back and actually settle. So we don't want publicity, but we love attention. So where are the assets? As I said, we look all over the world. We have a global aim strategy. And when we find an asset, there are different considerations. Like I said, the time bar, but also what is the applicable law? Can you attach already before you actually have a judgment of the award? And also what is the doctrine, for example, on sovereign immunity? So if you're acting against a state or government-owned entity, then you must make sure that you can actually go after those assets. Well, strategic considerations also, we try to attach at least 5-6 jurisdictions at the same time as much as possible. And we also look at what countries are more EU convention friendly, and also what would be the challenging in those separate jurisdictions. How? That is the third part. How do we do that? So we have as I said, our own in-house intelligence team that searches for assets and are very good at it. They are not, I don't want to insult them, but they're not anything like James Bond or Jason Bourne. They are not spying on people, putting on fake mustaches and following them around. It's really, they are behind their desk, and it's all research done behind the desk. So it's connecting dots from, for example, annual reports, but also our own databases, and also other asset tracing databases that we have a subscription to. And they all put that together in one big story. And usually what happens is, if I have a counterparty, then sometime later they come with a list and an overview of assets and jurisdictions, and I can have my local counsel and assist me with enforcing. Next slide, please, Tom. So maybe let me end my part of this with one more war story, if you will indulge me for 2 more minutes. We also did a case against the Republic of Tanzania, and our UK client was a civil engineering company who obtained an award that was worth $42 million. And what happened was that the Tanzanian government actually commissioned 4 planes in another country, and they were to be transferred to the Tanzanian airline company. But at that point, it was still owned by the government, and it was a commercial purpose, so it wasn't subject to sovereign immunity. And we managed to attach these planes. And the timing was very interesting, because we attached at the same day that the government published in the newspapers, the planes are coming home. As you can see, they were already completely prepared, and they had the logo, and they had this is the flying giraffe. And they were really disappointed when they found out that the planes were not going anywhere. But that actually really created momentum for us to settle the case briefly after the attachment of the airplanes. So that's it. I think the takeaway from this would be, we can assist. Well, it's good to know whether or not your counterparty can pay. If you expect that they are not going to pay voluntarily, and they already indicated that, or, well, it is to be expected, we can assist already when you are trying to obtain an award, but also when you have the award and not paying up, we are very, very happy to look at it and assist you with that. So thank you.
Wow, that was a great Q&A. For me, there are 3 takeaways from today's talk. The first is Omni Bridgeway makes a compelling case for companies to consider dispute funding, especially in this economic climate. So you can literally have the cake and eat most of it. Secondly, like a marriage, you need to choose your partner wisely. So it is important to choose a solid funding company with good reputation and capital to back up your case. Thirdly, getting an award in your favor is not the same thing as getting paid. You need to convert that piece of paper into money and payments. To our speakers, Tom, Marie-Aline, and Cheng-Yi, thank you very much for your time today. Judging from the Q&A, I believe all our attendees have learned something really useful today. And to all our Zoom attendees, thank you very much for joining us. We wish you good health, and until our next event, goodbye.